Yesterday, the euro extended its upward correction against the US dollar. However, after the release of upbeat data on US building permits, the European currency reversed its lead. Permits for future home building jumped by 6.9%, hitting the highest level since October 2022. Today, the focus of market participants will be on the Fed's meeting. The FOMC is widely expected to keep interest rates unchanged at 5.25 by 5.50% and signal a hike at its next meeting this year. By the way, the rate currently stands at a 22-year high. Besides, Fed officials will release their revised projections for interest rates in 2024 and 25. Likewise, major banks and Wall Street forecast that the regulator will maintain monetary stability. At the same time, one should bear in mind that the Fed will take into account rising energy prices, with oil having almost reached $100 per barrel. All these, as well as Fed Chair Jerome Powell's speech, may have a severe impact on the greenback and will therefore be in the spotlight. Although many expect the Fed to keep rates on hold, the outcome of the meeting may well come as a surprise. Last week, the European Central Bank was expected to leave rates unchanged, but it delivered another rate increase, which caused major sell-off in the euro. After all, such a decision hurts the economy rather than supports it. Speaking of other important news releases, Britain has already reported data on consumer prices. On a monthly basis, UK consumer prices rose by 0.3% in August, well below expectations for a 0.7% advance. Annually, UK inflation came in at 6.7%, while economists predicted an inflation rate of 7.0%. As a result, the British pound plunged on expectations that such statistics might allow the Bank of England to take a wait-and-see approach to monetary policy. Furthermore, traders have already received data from Europe's biggest economy. German producer prices advanced by 0.3% in August, above analyst forecasts. This indicates a renewed upswing in price pressures and suggests that the ECB is doing the right thing. Today, traders may also take notice of speeches by ECB members. However, their statements are unlikely to affect the market direction, as all eyes will be on the Fed's meeting. And now let's move on to technical analysis. According to the euro-dollar chart, 1.0688 acts as an intermediate resistance level. A false breakout at this mark will create a strong sell signal, thus bringing the euro down to 1.0657. A continued decline to one-month lows, 1.0620 and 1.0588, is possible only after the Fed's meeting, provided that the regulator raises interest rates or announces further policy tightening. If the price breaks through 1.0688 and consolidates above this level before the meeting, a buy signal will be generated. Thus, the euro will have a chance of rising to 1.0717. In case of more dovish soundings from the US Central Bank, the European currency will most likely extend gains, heading for 1.0747 and 1.0774. At the level of 1.0774, I recommend going short on a rebound to catch an intraday correction of 20-25 pips. If the euro dips below 1.0657, it will be possible to open short positions, counting on a slide to 1.0620 and 1.0588. Meanwhile, the British pound collapsed, weighed down by UK inflation data. Now bulls are trying to regain control of the market. A false breakout at 1.2340 will create a strong buy signal. However, current inflation figures do not yet allow the pound sterling to recover. Buying the pair against the trend is too risky. The best way to make a profit is to go short following a correction to 1.2388 or after the price fixes below 1.2340. After the Fed's meeting, sterling may well extend weakness, sliding to 1.2308, 1.2275, and even 1.2237. In case of a surge in the British currency, traders are recommended to go short amid a false breakout at 1.2421 or on a rebound at 1.2459. Best of luck!